How's it going, traders? Pips of Persia here with in essence, quick case study for Euro versus Australian dollar. So the purpose of this video is just to kind of go through the type of analysis that we went through over the weekend, just kind of before the market opened. How did we come to the decision to execute a trade on Euro Australian dollar? What were the final confirmations, and the main purpose of this video as well is to be able to help you a little bit more with understanding the Wyckoff schematics and kind of the fractal nature of the market, right? So all I've done right now is I've just put this in replay mode from, well, until where the market in essence opened. So this is just before the market opened, the Sunday that just passed, so a few days ago. Right now it's Wednesday, 3rd of June at 20 past 2 a.m. UK time. So on the 15-minute time frame for Euro Australian dollar, we can see in essence the perfect distribution schematics being printed on the charts, being printed on the candles in essence, right? So for those of you who trade Wyckoff schematics, then you'll be able to kind of know that this is in essence your typical, your very standard distribution schematics, right? So we can go ahead and in essence mark up our points for Wyckoff as well, and you'll be able to see how in essence similar, how perfect is printed on the chart. So far we've got the bias climax, automatic reaction, secondary test, and sign of weakness. So look at it as high low, lower high, lower low, and that's the first initial bit over here for Wyckoff. Bias climax, automatic reaction, secondary test, sign of weakness. Then we create two highs after that. In essence, that's the way I want you to kind of look at this now. I'm not going to go into too much detail about every single point, but the point is that's our UT and that's our UTAD up here. So up thrust and up thrust after distribution. So that's your perfect kind of distribution schematics being formed over there. After you see, the schematic being formed, how we kind of go ahead to decide whether we, are gonna take part in this distribution, whether this is even a distribution, cycle or a reaccumulation. That's something that a lot of traders may get confused with, but in essence, we want to wait for that perfect break of structure. Okay, excellent. On the time frame that I'm looking at, that distribution schematic, we have broken structure as well. So perfect. Now I know the directional bias. I should definitely be looking for those sell positions. Now, based on some smart money concepts, we look at areas that the market has stalled, where the institutions have probably executed some orders over there, and then mitigation out of those areas. I'm not going to go too much into detail about that, but if you trade smart money concepts, then you'll be able to know. Having a look at this chart right now, any type of price action, any type of institutional candle that was formed in any of that area was taken care of by that wick. So that wick was mitigation out of anything that happened over here. Over here we even pulled back to an extent to mitigate that wick. Any type of price action that happened over here on even lower time frames, right, was also taken care of by that wick. So in essence, now I know that my entries should probably be below the high of that wick, right? I need to be looking at entries below there. There's no need for this market to give us a deep retracement over here. And if I look at that more detailed on the 5-minute time frame, you'll be able to see high, low, lower high, lower low, lower high, lower low, lower high, lower low, right? So that bearish structure needs to hold for me to then want to tell myself, okay, yeah, I want to go ahead and sell this. So the entry for this was based on the 3-minute institutional candle right over there. Now the entry was based on the 50% of that, which on the 1-minute time frame, the reason I went for that 50% is simply because of that imbalance over there, that zone of imbalance, right? So entries was at the 50%, stops was at the high, right over there, and points of reference for those take profits coming from a little bit of a higher time frame. But before we go there, some of you may be thinking, oh, but Mehdi, we've got this equal highs over here. Ish equal highs. And you might say, oh, you know, this institutional candle over here, this wasn't mitigated, for example. That's completely true. That's another one of the scenarios that over the market outlook was looked at as well. But the point is, because of the risk to rewards that naturally we'll be looking at for these setups, even if this first position takes me out, that's for example, let's say 1% loss on the account, then that second position, okay, will cover that losses and give us returns on top of that, right? And that's just down to this low over here. Just down to this low. We'll be looking at potentially a 1 to 5 and a 1 to 6. So that the risk to reward is amazing. So that will obviously, you know, give us back the lost, in a sense, percentage. When you're looking at high risk to rewards, even if you're walking away with 50% accuracy, you're laughing. That's amazing, right? But anyway, point of reference for this take profit on the hourly time frame, I can in essence see that we stalled in price over here as well. The price in essence went sideways. So on a lower time frame, this was definitely some type of an accumulation before this market goes higher. Now I have to assume that this is a potential simply because of this accumulation that took place over here, right? So on the 30-minute time frame, you can see it's a little bit more clearly. That accumulation that was formed over there, once upon leaving that area, it left that you know, institutional candle, whatever you want to call it, the institutional candle, the punch candle, reaccumulation of price on lower time frame, whatever. So I knew the first initial target just above there. So that already gave us just about a 1 to 15 trade for that first point of reference. That was where, you know, the profit was finalized for myself, you know. So this would have been where I would have taken my profit. The only reason this trade wasn't entered is simply lack of alerts, if I want to be completely honest with you. But that's besides the point. It's just the fact of that distribution working well. And I'm going to go into the fractal nature of this a little bit later on as well. But naturally, you would have been able to have your profits even lower once you were kind of going based on more kind of higher time frame bias, right? Let's go to 4 hour and zoom out. Oh, no time for updates. So when you look at it under higher time frames as well, you can potentially see areas that the price needs to target, areas that that there's a lot of liquidity resting below. There's a lot of stops being placed somewhere over here. That's where your typical zone of demand in essence is, right? A lot of traders look at this as your support, reversal zone, whatever. So the type of trades that they'll be looking to take will be this. So based on that, I need to assume manipulation of that area. So I know that we're potentially visiting prices a little bit lower than there, which means I can even extend my profit all the way down here, giving us much better risk to rewards as well, right? So let's go back to the 15-minute time frame. Now, this specific trade, again, it's very, very interesting to study. The point of this video is for you to then take that time and actually study how these schematics form and where you can enter and so on and so forth. And this is a perfect example because once the market opened, we jump into that entry area. So the open price, or the 50% of that 3-minute candle, is the entry area, but our entries was based on that 50% specifically. So we wait a little bit. We let the market do its thing. That came to that 50% and activated that trade, activated that entry in essence, right? But I want you to have a very close look of what happened once this was being formed over here, once that was being printed over here. Yes, this did come to our stops, well, not stops, close to the stops in essence, but we were still far off, even taking into account spreads when you're trading on the true ECN accounts, right? Or raw spread accounts. So yeah, we would have taken some heat, but that's besides the point yet again when you're looking at high risk rewards. But check this out. Let's zoom in. I think it was 3 minutes or the 1 minute that I was looking at for this. Even on the 1 minute time frame, you can actually see the distribution schematics being formed over here as well. That's the interesting thing when it comes to it, right? This in itself is that perfect distribution schematics yet again, right? We've got our bias climax over here, got our automatic rally, secondary test, sign of weakness, and we go up to create that upthrust, and then the UTAT upthrust after distribution, and boom, we broke that structure to the downside as well. So this was in essence another further confirmation. Now we had another distribution schematics being formed, another distribution cycle rather being formed within that previous distribution cycle that we were looking at, right? So now, as if that wasn't enough, at its final point over here, again, we went from what time frame? We went from the 15-minute time frame, the biggest schematic, biggest cycle, down to the 1-minute cycle. Now, just to prove to you that, again, the fractal nature of the market, we're on the 15-second time frame right now. What have we got over here? It's the same thing. We've got our buyer's climax. We've got the automatic rally. Got the secondary test. Got that sign of weakness. We've got the UT. And we've got the UTAD. The point of that UTAD is to clear liquidity above all of these highs, right? So now I've got a 15-second distribution cycle being formed within that 1-minute distribution cycle, within that 15-minute distribution cycle, right? So once all of these confirmations are coming together, then the rest of it is just letting the trade really play out, letting the trade literally do its thing and completely melt in essence, you know? And that's where the market is at right now. So this would have been a fantastic, trade opportunity. Now, it's not necessarily about, oh, would have, or this trade should have been entered. That's completely not the point over here. The point is to be able to study these schematics being formed. Take time, start to learn the differences between distribution, accumulation, redistribution, reaccumulation, all of these stuff, and then try and even figure out for yourself what happened, let's say, in different areas as this market was declining, what took place in different areas, and how you would have been able to potentially even participate in entering another trade, stacking positions on the way down. Okay, so I hope this was kind of an educational video, emphasis on education. The whole purpose of this video is just to kind of give my personal outlook on EURAUD, something that I had my eye on since, well, just before the markets open really, and how just before even the midweek you would have been able to take a fantastic trade, which, with very low percent risk, when we're looking at 1 to 52 or 1 to 50 risk to rewards, you would have been able to capitalize heavily off of something like this. But it is important to understand that trading does indeed involve risk. Your capital is at risk. You should never ever risk more than what you're willing to lose. So take time to truly understand the truth of the markets. Take time to educate yourself properly. Spend time with traders who have the results that you desire and that are looking at the charts the way that you want to look at the charts, and genuinely increase that knowledge. Practice. A lot of chart time is involved because the skill set is a skill set that pays. Therefore, you need to spend a very, very, very good and decent amount of time perfecting it. But with that being said, if you have any questions, feel free to reach out to me on my Instagram at PipsOfPersia. If you have any questions, anything, drop me a message on PipsOfPersia. If you like this video as well, let me know on Instagram. And let me know if you managed to find any similar distribution or accumulation schematics that it makes you understand the true fractal nature of the market, and how looking at different time frames, how your higher time frame buys versus lower time frame entries can give you very nice risk rewards as well. But with that being said, hope everyone's well, hope everyone's safe and healthy, and let's catch some pips.